Good afternoon and welcome to GrainTV. It's August 28th, 2013. To my left is Logan Burgess and I'm Brock Shimbido. The markets were mixed in Chicago today. Seems like they're settling into a bit of a consolidation period. Let's turn over to Fire Tip to see how we ended. Old crop corn was up 4.5 cents, new crop down 5.5 cents, soybeans on the old crop up 19 cents, soybeans for the new crop up 2.25 cents, wheat in Chicago down 4.25 cents, and Kansas City was off just a penny today. You know, Logan, we had a relatively light news day today coming across the news wires. One bit of information we did get was the EIA ethanol production and stocks figures.
Yeah, you know, we did get those numbers, and here for the third week in a row, we saw ethanol production decrease week over week, down 24,000 barrels per day on the week to 820,000 barrels per day on average last week. Take a look here, though, at the margin that we've seen here in Iowa. We've seen it back off here quite a bit in the last couple weeks, really driving that lower production number. What we're seeing here on the vertical axis is that crush margin in cents per bushel or dollars per bushel here for those ethanol facilities. And you know, I don't know if this is a big story for the futures market. We saw weaker ethanol production, but we saw old crop futures rally a little bit today. The big thing I think that farmers need to take away from this is what it's doing to basis right now. We know that when ethanol facilities have a weaker crush margin, which is what we're experiencing right now, they're not able to aggressively bid corn in the spot market. And if we look at right now kind of what's happening in the market in general, we see new crop bushels coming up from the southern states as far south as Mississippi all the way to Decatur, Illinois. We've seen that really hammer on basis as well. So I think this is kind of, this might be signifying that this is, you know, at the end of the marketing year, it might be time to sweep those bins out, because I think right now this shows or indicates that there is some serious downside risk in basis right now. We've seen it a little bit this week, so it might be an opportunity to kind of take a look and see where strong basis is and take advantage of it.
You know, if you turn your attention back to the futures market, we did see a little bit of a dichotomy between the old crop contracts, September contracts, and the new crop contracts, December and then November for soybeans.
Right.
You know, the old crop, they rallied a little bit. Old crop corn was up about 4.5 cents. Old crop beans was up 19 cents. So substantial rallies in those markets, where the other two markets, the new crop, really didn't rally as much. And I think, you know, part of that could be driven by what's going on in the old crop cash markets, but I think also that's driven by what's going to happen on Friday. First notice day for those September contracts is on Friday, so I think we're seeing some unwinding of positions there, driving the market up just a little bit.
Yeah, you know, we certainly could be seeing that, and certainly that could be the situation in the wheat market as well right now. We haven't talked about wheat a lot here in general, just because corn and soybeans have kind of been at the forefront as they've seen some pretty big rallies. But today we did get some information out that's important for the wheat market. We know yesterday the Egyptians released a large tender for wheat, and there was some hopes that the U.S. market would win some of those sales. We didn't see any sales go to the U.S. here in the report today. Russia, Romania, and the Ukraine took all those sales. So certainly, as people are looking at that, that's an indication that U.S. wheat is relatively uncompetitive on the global front. We have heard some information or some news that the South Americans have been buying U.S. wheat aggressively, but I think people still look at those Egyptian tenders and really put a lot of weight on those. So I guess bottom line right now, in light of a falling corn market and an inability to get export sales, it seems like wheat may stay depressed here a little bit, really for the next couple weeks, until we get some more information by way of the September WASDE report.
You know, speaking of export sales, we do get the export sales report out tomorrow by the USDA. The estimates from the average of the analysts are for wheat 350 to 550,000 metric tons. Corn, net reductions of up to 50,000 metric tons, but for new crop looking for 350 to 550,000 metric tons. Soybeans, net reductions of up to 100,000 metric tons there, and for new crop 600 to 900,000 metric tons. So pretty weak sales for old crop corn and soybeans, and actually reductions are most likely there as we are close to the end of the marketing year, like you said. But pretty good sales going forward for wheat and for corn and soybeans on the new crop.
Yeah, certainly. We'll have to see what the USDA reports tomorrow. In that report, we'll be tweeting about it live when it comes out over on Twitter. @GrainTV is where you can find us in there. But in general, I think that's kind of what we saw here for a Wednesday. It certainly seems like a grain market that's looking for some direction right now. We'll see if we can find it tomorrow. Thanks a lot for joining us on GrainTV.